Good day everyone, this is your European Open briefing for Thursday, January 25th. My name is Michael Florentiades, I'm the Chief Economist here at xm.com, and these are your key points for today. First of all, greenback selling has been relentless as the dollar index hit its lowest since December of 2014, below the key 90 level, or even below the 89 level. All eyes today will be on the European Central Bank and its president Mario Draghi for their first meeting of the year. For the day ahead, we have the German IFO business sentiment, Norway's rate decision, the ECB, of course, which we mentioned, Canadian retail sales, US jobless claims, goods trade in the US, and new home sales. And, of course, any statements out of Davos, Switzerland, where the World Economic Forum is meeting, will also be closely watched. Now, this is the dollar index. You can see in the last couple of months how sharp it has fallen. So it has fallen to a 3-year plus lows. The dollar was weaker across the board as the US Treasury Secretary Steven Mnuchin said a weaker dollar was, quote, good for US trade. Now, this was a bit of a negative shock to the dollar and led to some strong selling. Was this a change of policy by the US government or just loose lips by an inexperienced Treasury Secretary? The reason is that the US administration has always advocated a strong dollar. This has been the mantra or what they say in public. So their endorsement of a weaker dollar did raise quite a few eyebrows. This is also a currency wars type rhetoric. Why do I say that? Because every country would like a cheaper currency to help its exporters. But if everyone is going for a cheaper currency, it has to be at the expense of somebody else. So who is going to be left with a stronger currency? So this can lead to tensions if governments are purposefully going for a weaker currency. All this is speculation. Of course, we will see whether the dollar policy of the US has changed. But it goes to show you a little bit what happened behind why this selling took place. Now, the best performing major against the US dollar has been the British pound. And I say that this was a remarkable show of force by the pound. The pound has risen to post Brexit highs versus the dollar. And after the key 140 level, 143 was quickly taken. You see here how quickly in the space of a day or more, like almost 24 hours, we went to 143. Now this was remarkable because this was in the absence of concrete positive news about Brexit. Yes, we have positive expectations. We are hearing some positive signals, but nothing really concrete on Brexit. So this is a bit striking sterling's rally. Now, with respect to the euro has also been strong above the 124 level. It has retraced a little bit some of its gains. Now, we had some hawkish hints in the December ECB meetings. So, what is Draghi going to say today to follow up those hawkish hints? Eurozone data has generally been on the positive side, but the strength in the euro does threaten to dampen inflation. So it's going to be interesting whether Draghi is going to address the issue of currency strength. He will probably say something, but we will see how strong it will be. And will Draghi signal anything, prepare the ground for any changes during the March meeting? So maybe the March meeting is going to be more important because there we are going to have some more guidance about quantitative easing and what is going to happen to interest rates. Remember, quantitative easing has fallen to 30 billion euros per month now, from its peak of 60 billion last year. During the March meeting, we are going to get new economic forecasts, and the ECB always feels more comfortable to take steps with an updated set of forecasts. On to gold. We have seen some significant developments here because it has broken its 2017 highs. It has traded as high as 1366 today. Gold is now eyeing the 2016 high of 1375. What does gold strength tell us? Of course, it is reflective of dollar weakness. However, I think there is also an angle that is interesting because we have certain protectionist moves by the United States, specifically an increase in tariffs on solar panels and washing machines. If the US keeps up their unilateral protectionist moves, this could cause a possible retaliation and things could escalate to a trade war possibly. I know this is a bit of scaremongering, but we have to see how far this goes. And would this actually hit dollar and stocks? And a safe haven in that case would be gold. So something to watch definitely with political developments. Today, as we said, busy day. The GfK consumer sentiment from Germany came out at a multi-year high. The IFO index coming out a little bit later, expected to hold at fairly lofty levels. The Norge Bank not expected to move. The ECB also not expected to move, of course, but it will be the signals it will give will be closely watched. And some data such as Canadian retail sales, new home sales out of the US, and as well as jobless claims. That's all from me. Thank you very much for watching and have a great day.